Amidst the FTX implosion, one name has been called many times and have been the subject of many speculations and rumors amidst the scandal. While she may have remained in total obscurity until this incident, the question on the minds of many remains: who is Caroline Ellison, and what role did she play in the whole collapse of the large FTX crypto empire? Caroline Ellison, the mastermind that ran the cryptocurrency trading firm Alameda Research and one-time love interest of Sam Bankman-Fried, will be our focus on this video. Who is she? What role did she play in the collapse? And what's going to happen to her now as investigation goes on? You have questions, and we have answers, and we'll be sharing some of those answers with you soon. But before we dive right into that, please take a second to like this video and subscribe to this channel to get more amazing videos like this going forward. And while you're at it, don't forget to hit that bell icon to always be the first to be notified when we drop new and similar videos. Ready to get the gist? Alright then, let's dive in. During the period when FTX was at the brink of sinking the whole of the crypto space into a black hole, Sam Bankman-Fried was still optimistic of a way out of the mess. He even went on Twitter to calm users and investors. It's amusing that despite the looming danger, he insisted for days that FTX was fine, and yes, he had someone beside him encouraging him all the way through. You guessed it right. Caroline Ellison was joining in fighting the tension and panic as well as calming the crowd. Caroline Ellison is the 28-year-old chief executive of Alameda Research. Alameda Research is the crypto trading firm founded by Sam, but while he focused on running FTX from the Bahamas, Ellison was put in charge to manage the affairs of Alameda. So while the rumors of the FTX scandal were looming, Caroline, who is pretty much an unknown figure in the crypto space, kept claiming that Mr. Bankman-Fried's empire was stable. But despite her efforts, her words were not enough to withstand the big blows from the tweets coming from the Binance boss. Mr. Zhao's comments left the company owing $8 billion, and within a week after his tweet, Alameda and FTX filed for bankruptcy. So who is Caroline Ellison? Ellison was raised by two MIT economists. She graduated from Stanford with a degree in mathematics. Miss Ellison grew up in the Boston area and was the captain of the Newton North High School math team. She was regarded as a serious student and a hard worker. Caroline met Sam Bankman-Fried while working at the trading firm Jane Street Capital. Similar to Ellison, Sam was also raised by professors, and when he met Caroline, they both had a lot in common. One belief they shared was the philosophy of effective altruism. They had the mission to make large amounts of money and give all out to charity and other philanthropic pursuits that will benefit society to the greatest extent possible. Caroline and Sam were also involved in an on and off relationship. In 2017, Caroline joined Sam after he decided to leave Jane Street to found his own hedge fund known as Alameda Research. She called this move a blind leap into the unknown. After a while, she became the lead trader at the new firm, and it's even said that joining Alameda was just one of the best decisions she's made. She described her experience in one of FTX-related podcasts, stating that, mostly, sort of, it was something I wasn't used to thinking about, she said. So it was sort of, I don't know, I guess I was like a trader for, not that long at Jane Street, but a year and a half, which was kind of more trading experience than a lot of Alameda traders had at the time. I kind of wanted to come in and be like an expert on everything, but there was still lots of stuff in the crypto world that I knew nothing about. And there started her long walk to making Alameda one of the fastest growing trading platforms. Alameda was a major trader in the cryptocurrency space and traded frequently on the FTX exchange. Over time, Bankman-Fried ceded control of Alameda to Caroline and focused his attention towards making FTX the greatest trading and exchange platform. Or so he thought. FTX grew exponentially and made fast profits by exploiting the inefficiencies in the Bitcoin market. Not long after, the company got a huge violation about $32 billion and was ranked as the world's third largest cryptocurrency exchange by volume. While this kind of growth is every founder's dream, Sam didn't know it was an implosion waiting to happen. He failed to manage it right, and thanks to Caroline, he wasn't aware he was building an empire on quicksand. It didn't take time before it came sinking. So what exactly was Caroline's error? How did she ruin it all? We'll get to that shortly, but first, let's go on with Ellison's story and how she rose through the ranks of the company to even become the one calling the big shots. In October 2021, Ellison was named co-CEO of Alameda with Sam Trbuchan. Some months later, in August 2022, Trbuchan announced on Twitter that he was stepping down as CEO. He mentioned that leading Alameda alongside Ellison had been difficult and exhausting and consuming. He resigned and assumed an advisory role. At this point, Ellison was in charge of the trading firm and made the major decision of the firm, sometimes without informing Sam. Amidst the dwindling price of crypto and the volatility of the market, Alameda Research was just about to get into troubles. The relationship between Alameda and FTX was the major catalyst that led to the eventual destruction of both companies and the implosion of the Sam Bankman-Fried empire. It's not news that Alameda traded heavily on the FTX platform and oftentimes benefited when other traders on the FTX exchange lost money. This was clearly a conflict of interest, and most times, Sam shied away from the topic whenever it was brought up in any interview. While Ellison was in charge of Alameda, a trading firm heavy on crypto, she was still not enthusiastic about crypto technology. On many occasions, she stated how she's only into crypto to make a lot of money, which she planned to give away as part of her commitment to effective altruism. "I do think a lot of crypto projects don't have much real value," she said matter-of-factly on FTX's official podcast in early 2021. While she claimed to be an effective altruist, she really lacked the maturity and professionalism needed to be at the helm of a trading platform like Alameda. Online, she was always flippant about her management of the firm. Ms. Ellison didn't hide the fact that at Alameda and FTX, traders often used Adderall-like stimulants to remain alert over long hours, a habit she was also practicing. In 2021, she tweeted, "Nothing like regular amphetamine use to make you appreciate how dumb a lot of normal, non-medicated human experience is." And clearly, it wasn't long before both companies started facing the consequences of a drug-induced productivity and functionality. There were numerous signs that Alameda was in trouble. Recently uncovered in the company's quarterly financial statement, it was revealed that the company's quarterly financial statements were never audited. A business partner in the firm had one time noticed a line representing $2 billion of the investments on Alameda's balance sheet, and while this was a large size of the company's overall assets, the Alameda representatives could explain what it was. The empire came crashing down after an article on CoinDesk exposed Alameda's balance sheet and showed that a large portion of the company's assets consisted of FTT, which was the token invented by FTX. With this leakage, and amidst the dwindling crypto prices, many investors and traders became worried about the financial stability of Sam Bankman-Fried's empire. One person that escalated the whole issue was the CEO of Binance, CZ. He announced his plans to sell an enormous supply of FTT. With this sale, the price of FTT would clearly drop from its price of $22. This definitely would have led FTX into more troubles, as clearly the price would have kept dropping. But Ellison was still trying to stay strong. While replying to CZ in a tweet, she boasted, "Alameda will happily buy it all from you today at $22, she said. While this was on, a lot of damage control was happening behind the scene. She gave orders to her small team of traders to keep the token's price at $22 by placing bids at roughly that level. But this wasn't enough to keep the panic at bay, as crypto traders were set into a bank run by CZ's tweet and rushed to withdraw their holdings from FTX. As the crisis ensued, the young Miss Ellison broke into tears and opened up to employees that Alameda had taken customer funds from FTX to make up for shortfalls in its accounts. At this point, FTX now owes creditors $8 billion, and it's reported that the amount it lent to Alameda is as high as $10 billion. While we may not know the fate of Miss Ellison, it's clear that things just didn't go as planned, and she wasn't smart enough to see beyond and prepare for this change. Was it recklessness? Was it mismanagement? Or just sheer arrogance? Share your thoughts with us in the comments section below. Kindly like this video if you found it useful, and please don't hesitate to share it with your friends and family. Stay tuned as we bring on more gist.